My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So a couple headlines before we get into the technical analysis, the trade setups, and the levels. Number one, we're looking at a market that is rallying higher today, or at least floating higher. I wouldn't call it necessarily a big rally. Yesterday, we did hold that major technical support on the S&P. That is good for now. Just watch that level at 67.90. Now, the key here is oil is coming down just a little bit. This is after essentially the president and the U.S. has now guaranteed to insure and protect ships going through the Straits of Hormuz. And so really that brings oil in, which then brings future inflation expectations down slightly. The markets like that. That is the key right there. So we'll see how that continues. We did get the ADP private sector data out today, came in at 63,000 jobs created. That was slightly better than expectations, but more than anything, it shows you that the labor market is okay. It's not falling apart, and that also gives confidence to investors to stick with the market. All right, let's jump in and take a look at the S&P futures. You can see, again, this was yesterday. We had that initial dip, then rallied back to the upside, faded. Overnight, we were fading lower, 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 and then really starting around 1 a.m. Eastern time, the market started to catch a bid, a little bit of a pullback there in the pre-market, and pushing back up to the high. So if you look at, interestingly enough, if we look at yesterday's stock market high, we are kind of just hammering on that, right? The highs from yesterday, that has now become key resistance on the S&P futures. That's what we're watching for intraday. If we can get above this, now you're talking about potentially going back to about 6,900 on the S&P futures there. Now, again, we'll go to the S&P 500, which is really what most of us follow. I just use the futures to go over the pre-market data, but this is what was pretty remarkable yesterday. Look at the drop below the major support trend line here at 67.90. But remember what I said in yesterday's game plan. Just because you're below doesn't mean it's a breakdown. You got to close below, and in theory, you really want to confirm, but closing below is step one of a real breakdown. And when all was said and done, we can very clearly see the markets were able to fight back. This is an impressive level. Now, it works in two ways. Number one, as long as we hold it, the markets could float up a little bit like we're seeing today, right? But the kicker is this. When you have a level that over and over again holds and gets bounces, it creates a structure where a lot of investors will go long here, but they'll put their stop just underneath. And so what happens is if it does end up breaking, the market will likely have that big move to the downside that everyone is very concerned about, right? So again, that would be the break point. This is the level that I would say every investor that is intelligent wants to be following, a daily close below 67.90. All right. NASDAQ, same sort of deal here. We had filled this gap over here. Let's bring that up here. Here was a gap fill. You can see that gap. That level again, if we zoom in on it, there's your gap closed from here to your open. There's your hit. And yesterday we pierced it and then recovered. Now, listen, the NASDAQ was still down 1% on the day, but it was a far cry from the 2.5% to 3% we were down at the lows. So the market is continuing to stay resilient. And what's interesting here is, believe it or not, a lot of people have asked me, well, you know, the war here, why isn't the market dropping out? Historically, believe it or not, when you look at wars, they generally don't cause the markets to go down. They actually cause the markets in the near term to go up. The reason being is wars are stimulative, right? So think about all the spending that the government does on buying new bombs, new airplanes, whatever it may be. It is often stimulative to the economy. Now, listen, overall, I don't think it's stimulative enough to overtake AI CapEx, which eventually I think is the downfall of the economy, right? Eventually, when these companies stop spending $200 billion every year, like all of these companies, 200 for you, 200, you get 200, you get 200 billion, you get 150 billion, right? Eventually, if that stalls out, that's going to be the downfall. But still, in the short term, believe it or not, historically, war has actually helped the markets grind higher in the near term. Just a little tidbit to keep in mind. Now, the 10-year yield yesterday fell back down from the highs. That helped the markets rally. Today we're up a little bit here, but nothing significant, right? All this is a great bounce from the drop, but it's not anything yet that gets my attention. The 10-year yield trading at 4.075%. The dollar, I told you guys about this yesterday. I don't know if I have any currency traders watching, but I said short this level right here, this upper parallel. Look at that. In the currency markets, that's a nice gain with the leverage that you guys get as well. Great pullback from a high of 99.60 back to today's current level at 98.80. And it got as low, by the way, as 98.70, almost $1 on the DXY pullback right there. But that was classic technical analysis. Again, all it is, and by the way, I didn't know I was going to be right for sure. There was no 100%, but it's probability, my friends. It is all about probability. And right there, probability dictated that would be the resistance point. And again, probability means it's highly likely. And that's what it was. So very cool stuff like that. I love showing that stuff, folks. It is just so cool. So oil today, you can see oil is fractionally lower. It still has not hit a level where I would consider shorting it. I'd still be looking at this level to start a position. That's okay. I don't mind not getting in a position short oil unless I have 70 to 80% success rate based on my factors list. So I'm always looking at what are my factors? What are my technical factors? What are my time factors? What are my other psychological factors that are affecting price via the chart? And I only want to take a trade if it's 70 to 80% success, because anything less to me feels too much like a gamble. Now, other people will say, okay, well, I'm okay with 60%. That's okay, as long as you understand it and you're doing the math based on legit technical analysis versus going by emotion. Most investors trade off emotion, hype, greed, fear, all of that stuff. That's why they lose money. You start focusing on pure technicals, you become a logic-based trader of probabilities, and you become the casino, not the gambler. All right. Let's continue on here, folks. Gold yesterday, beautiful breakdown. We talked about how this level was a great call by myself here. We hit this key resistance. We then fell back down. We're getting a small bounce today. As long as we stay below this zone here. So notice these two trend lines are merging. That, as long as we stay below there, then what you look for is something like this, an eventual dump. In other words, you start to look to see, do we form a bear flag? If we get above here, then it starts going up quite substantially. But right now, that's what you're following. Silver, great sell-off, almost 10% yesterday. Small bounce today. Again, very key resistance right up here, getting rejected. This, again, as far as I'm concerned, continues to stay in a choppy, sideways, price action-driven market, right? Now, what kind of pattern is this? Well, we all know that pattern, or at least I hope we do. That's a bearish flag pattern consolidation. That tells me that in the next, let's say, month or so, maybe not in the next few days, because I mean, really the next week or so, you could just continue to chop. But I would say in the next month to 6 weeks, eventually this pattern, if it doesn't break out above here, this eventually takes a toll to the downside. Now, we're going to get into stocks and levels. All right, we have Broadcom earnings after the bell today, a $1 trillion+ company, the semiconductor company, in fact, that's kind of second tier to Nvidia. They report earnings after the bell. We'll look at that chart. But Bitcoin, I've been telling you guys, it's a bullish pattern. The probabilities favor an upside move. Let's go in and take a look at Bitcoin. All right, what's going on here? Here we are, folks. Here it is on Bitcoin. Look at this move. Let's put in our chart levels. This was that bullish consolidation pattern that I've been talking about pretty much nonstop for the last month almost off of this reversal. Here we go, guys. Game on. This looks like it could be the start of the breakout that I've been telling people that it would likely happen. And again, there was no 100%. And I always reiterate that because I think people think that, you know, what I say has to happen. No, nothing. It's always remember it's probabilities. And so when I'm talking about a position or that I've taken and I have taken in Bitcoin, and I'm in it and I talk about, okay, this is a bullish pattern, this is this, and I show it, what essentially I'm saying to you is that the odds are favoring this move. And in general, for me to get in, I have to believe it's 70% or greater chance of the move happening. Now, it still leaves 30% or less that it doesn't happen. But again, I just want to rinse and repeat. I don't care what it is. I don't care what I'm trading. If the chart signals 70, 75, 80% success rate over and over again, I take every one of those trades because what I know is that over the long term, I'll win 7 out of 10 times, 70 out of 100, 700 out of 1,000 times, or 75, 750 out of 1,000. The point is the math takes care of itself. And that for us is key because institutions prey on our emotions. And I'm telling you guys, I've been in the institutional game. They rely on fear and greed. Fear gets them the opportunity, institutional money to accumulate, and greed gets their ability to distribute, dump into you. And so as soon as we start using logic, we then counteract that effect from the institutional money. Very, very important, folks. Very, very important. All right, let's continue on, guys. Let's look at Microsoft here real quick. Microsoft, I remain bullish on. In fact, in smart money stocks and ETFs, I have a position in Microsoft here. I like it as long as it doesn't confirm below this line. Look at this long-term trend line. I do still think it's beaten down sharply. I still think it could go as high as 420, maybe even higher, maybe to 425. So again, I remain long on this, but keep in mind, I have a game plan. Before I enter a trade, I always have my game plan. I have my factors list. I ask myself, am I chasing? Am I getting, is there any emotional trigger? If it's not, then I say, okay, what is the chart telling me? And what is my ultimate maneuvering? Meaning that if it breaks this level, the thesis is negated. These are the types of things, if you train your brain to do, it becomes second nature. I do it in literally a split second. All of those things my brain can do now because I've trained it. But ultimately in this chart, what does this tell me? Well, if we ever confirm below this level, we close below, we never confirmed, right? So if we confirm below this level, then I stop out. Now we're in from 388. So, I mean, I'd even potentially stop out for a break even or even slightly in the money. But the point is that this chart remains bullish unless proven otherwise. Proven otherwise would mean confirming below this level. Meta, same thing, guys. I'm not long Meta, but you would still look at this trend line as being a fantastic arbiter of a chart. Bullish until it breaks and confirms. Once it does, watch out below. All right, this is where the discipline is so important because if you do take something like Meta, you have to really have your levels. Because if you don't have your exit strategy already in your mind and then it starts to fall, people generally go into what I call in my new course, the psychology course, survival mindset, which is like, oh, it'll come back. Oh, please, 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 it'll come back. I hope it comes back. Hopes, the market eats those alive. It just is. It will feed on that and it'll make you lose more money. Logic is the key here. Nvidia, on Nvidia, we're still holding here. We've just been in a range, as we can see here, range-bound trading. Now, the one thing I will point out is that notice how on the S&P 500, when we break this level and confirm, that's going to be the big breakdown, right? That, my guess is that will also, at the same time that happens, that's probably where this trend line breaks on Microsoft, this trend line breaks on Meta, this trend line breaks on Nvidia. It's all kind of coming into alignment, right? All right, lastly, let's quickly talk about Broadcom. Broadcom here, folks. Here we have Broadcom. It continues to hold. They report earnings after the bell today. Now, listen, I'm not long or short Broadcom right now. I'm not going to do that into earnings. But like I said, here's a very defined level. If it starts breaking below this level, now listen, we won't know until tomorrow when the craziness kind of calms down. But watch this 306 level. Right now, it's above support. Maybe that favors a slight bounce on earnings. I think the earnings should be pretty darn good since Nvidia's were good as well, right? They're both semiconductor stocks. They kind of compete with each other. The only thing I would say is that, remember, I mean, so you could look at it as, okay, it's at support. It's holding support, and that's bullish. But the drawdown is that Nvidia reported really good earnings and really good guidance, and it still fell. Right. So it's really hard to know here because there's different market dynamics. In my opinion, what we're seeing is institutional money continue to unload. Because remember, Nvidia was up after hours on earnings, even at the start of the day, and then it just got dumped on. And I think it's important to recognize it probably wasn't mom and pops being like, oh, and I got to dump Nvidia. They had great earnings, great guidance. That's institutional money. And so let's watch and see. Again, I don't have a good bias here of which way it goes. That's okay. I just sit back and let a trade come to me. If it dumps massively, I might buy it for a day trade the next day. If it rallies sharply, I may short it. Let's let the trade come to us. Let's not force our opinions or our trades on a chart. All right, lastly, I haven't gone over Nat Gas today, and I always try to do that. Nat Gas pulling back a little bit today. I did unload, as I mentioned in yesterday's game plan. I did take profits on this for about a 13% move up on natural gas. So far, I'm glad I did that. Would I rebuy? Yes. But I want to see it make a lower low. I want to see this down to about 270 down here on Nat Gas. Then I think I would inch in just a starter position again. All right. So listen, when all is said and done here, ADP was slightly better than expected. Oil is coming in, at least for now. And remember, we could see a headline today that totally changes that. But at least for now, oil is coming in a little bit, which is helping the confidence in the market of maybe things aren't as bad and maybe aren't going to spread as much in the Middle East, especially with the U.S. holding on to or ensuring and helping, ships get through the Straits of Hormuz. But ultimately, I will be here. Verified Investing is here for you guys. We will continue to bring you logic and database charts, no BS. If you want the BS, there's X, there's Reddit, there's even mainstream media. You guys can go other places. For us, I really want us here to be a shining star, a lighthouse in the dark that shows you guys the logic-based assessment. That's it. Logic. What's the logic? All right, you guys go have a great rest of your day. Thank you so much for tuning in. Please share with friends and family if you think they could benefit from these game plans. That would be a big help to me, and I'll talk to you soon. Take care.